the upside. So marking where this was our prior major high at, this would now be our most recent major low in this. All right, everyone, welcome back to the channel. Let's talk about structure. All right, we're talking about the NASDAQ futures and looking at, let's start off with the 60 range. Okay, now what we can see, it looks like, we're breaking structure to the downside. All right, because we broke below this area here. This would be a minor area structure broken back down to the downside, and the market starts making or starts to continue moving lower. Okay, so these are areas of supply in which the market could have or did test and reject it from. So, but if we look at the higher base chart, okay, and then we'll go back to the 60, what you can see is that the market broke structure above here, above this area at 266. That was a major high right there. All right, so we see it break up, pull back. Okay, so it had a high here, it broke above that high. This was if you want to classify that as the major low, and then the new major high is resting up here. So when we broke this area here, we made a new major high sitting up there. So this was an impulse leg to the upside. All right, so we are on the higher base chart, the 120 range. We are still bullish overall in the market. But, this is where things get kind of tricky, because a lot of people have a hard time trading when the market is, for example, this would be, let's say, counter trend trading, right? If the market is moving lower on a slightly lower base chart, the 60 range chart, and we're looking for pullbacks to go short, a lot of people say, well, I'm looking at a higher base chart and the market looks bullish to me. But that's the thing about trading. And that's why I talk about wait for things to line up to where everything is moving in the same direction, meaning that say for example, the higher base chart, the 120 range chart is already bullish. And then we look for a turnaround the market or a structural break to the upside where the market on the 60 range is bullish as well. Right now we're bearish on the 60 range. Okay, so we're actually moving against the grain of the 120. Now you may be saying, well, Mike, at what point would you be looking for maybe a possibility of looking for a long entry to go long, okay, based on what's going on the 120. Well, if we get a structural break back to the upside right here, a minor structural break back to the upside, because we're bullish on the higher time frame, then I would be looking for opportunity for a pullback to go long. That way we are moving in the same direction as the higher base 120 range chart. So that's why I say, especially beginner traders, trade, meaning having confluence on multiple charts where the charts are moving together simultaneously in the same direction, trending in one direction, looking for pullbacks to, in this case here, areas of demand, because the higher base 120 range chart is bullish. Even as we scale down to lower base charts, looking for opportunity to go long at, we want to make sure we're following suit with the higher base chart. So a break above here at 257, maybe a pullback to go long. Can you still look for opportunities to go short? Yeah, if the market continues running to the downside, and we identify areas where there are supply zones. Okay, yeah, we could do so, because right now, again, we broke a minor area structure to the downside on the 60 range, so we would be looking for opportunity to go short, as long as we continue showing bullish opportunity on the 60 range. Okay, but again, we're still against the grain, against the higher time frame chart. So that's why I recommend all new traders, beginner traders, please try to take your trades in the direction where all charts are moving in the same direction. Understand that, okay? But yeah, this would be counter trend trading right now, but you could definitely do so. I do it every day, but it works out better when you have when you definitely have the charts moving in the same direction, is what I'm trying to say. All right. So what I highly recommend, and I say this in all videos, patience. Trading is about being patient. And if you want to find consistency to become profitable and do this, whether it's full time or for a living, you're going to have to understand and master market structure. I'm going to keep saying this in every video because it's imperative to understand what's going on with structure. Look, professional traders, I'll be honest with you, experienced traders do not need a bunch of load of indicators. Indicators lag. Not that they don't help you. I'll say that they may guide you once you are into a trade, but they lag, so they're not going to tell you when to get in and when to get out at. You have to be able to understand the flow of the market, understanding price action, understanding the overall structure by moving down from higher base to lower base charts, okay? Whether you're using time tick, volume, range charts. It doesn't, you have to understand what's going on because there can be multiple variations of where a higher base chart is moving to the upside is bullish, but a lower base chart may not be. So you don't want to get caught in the middle, especially trading on a lower base chart. And you may be trading at a zone that the market has tapped into on a higher base chart. And then you're looking to go short and you have a supply area, a demand area, an area of a thick area of support resting right below. And there could be an area of demand within that area that the market may reject off the higher base chart. And you're looking to go short. So you're shorting into you're shorting into a brick wall. All right. And it's not going to go anywhere back up, other than up, because the higher base charts are more powerful. So that's why we wait for, if the market taps into a higher base chart zone, supply or demand, then you can expect something to happen. All right. Especially like it's at a demand zone, it's going to more likely push to the upside. Supply zone, push to the downside. So study time on the charts using naked charts. I mean, nothing on your charts, just being able to follow the flow of the market. That's where you're going to find the success at. All right, that's the secret. Be honest with you, market structure is king to everything. It's market structure trumps all. Okay, I don't care. There's no indicator out there that's going to give you the full on 100%. Oh, this is telling me to go in this direction, take this trade here. No, you can't do that. You have to understand structure is what it is. It tells you, what the market is trying to do. And it's like reading a book. I keep saying this in multiple videos about reading a book, understanding, comprehending the storyline. It's the same thing. Understanding just visual representation on the charts when we look at this stuff with our eyes to see, the flow of the market, especially like on a higher base chart, moving to the upside. Okay. And then it's moving to the downside. We haven't broken through any significant area of structure on the higher base chart, but the lower base 60 range, yeah, we broke minor area of structure. And right now it's just ranging. So we wait patiently for something to happen. That's probably the biggest problem or that a lot of traders have is not being, especially beginner traders. They always want to be into a trade. Okay. Everything looks sweet and nice to them. The market is racing to the upside or moving up. And, they feel as if the market's leaving them behind. All it's doing is setting itself up to stop you out. Okay. You're going to get trapped. So stop chasing the market. Okay. So if you took a short at any one of these supply areas here off of the 60, then you were golden. You had one opportunity here, second opportunity, third opportunity. Okay. So, right here, it pushed back up to this area here, supply zone, runs a low. Okay. Does the same thing here, pulls back, runs a low, pulls back, and it comes back down to the lows. But you got to be mindful because you have support resting in this area. And even the higher base chart, the 120 shows you right here. So just be careful. If it breaks back to the upside here, yeah, we'll be breaking through, a minor area structure back to the upside. All right. And with that said, we are bullish already. So you can look for a pullback to go long in the continuation of the market back to the upside. Right? And it should more likely continue pushing back to the upside because we haven't really broken through any key area of structure back down on the higher base 120 range chart. So let the charts tell you and show you what's going on in the market. So as we can see, the market's it hasn't done a lot since the shortly after the opening today. And we had news, I believe, at 10 today as well. Yeah, so the market's pushed to the downside here. And let me see here. We had some low impact news around 1:30, 2 o'clock today. But anyways, what I'm trying to say is that the market pushed lower. Now this right here, if we do get a break, this is off the 120 range chart. Okay, you can see it on right here below 104. Possibly can see it as well. Let me take a look here. Yeah, right below here as well. But if we look at the higher base chart here, now this wouldn't be a major break of structure to the downside off the higher base, but we would be breaking through some area of structure below here at 104 if it broke below that area to the downside on the 120 range. But again, we're not taking the trades off of the 120 range. This is all about paying close attention to structure of the market. So as you can see now, we have, okay, so we're breaking structure to the upside here, right? And typically speaking, since we're already bullish from the higher base 120 range chart, we're already bullish there. And then we're turning back around on on the 60 range chart, okay? And we get our first break of structure. that's a telltale sign right at the beginning, especially when they kind of pushed up here to pull back, kind of played around this area here. Then we break structure. So they kind of consolidated, and then the market breaks structure to the upside, and we're already bullish on a higher base chart. It's kind of an indication that they want to continue moving to the upside, but we have to be very careful because there is structure right here. Okay, this is the minor area structure that it must be taken out if it's going to continue to run to the upside. So we have to pay close attention to areas like that. Is what I'm trying to say. So we'll look to see what happens if they come back and just test this area and want to break away from it and push higher. But they must take this area out if they want to continue pushing higher. So as you can see, that this is actually an area of demand right here, and this, let's see, 239. About a point away from that area, pretty much. I mean, from tapping into that demand zone right there. We got two bullish candles to the upside showing us aggressive buying to the upside. So the market may want to continue pushing higher. So let's just roughly and just kind of from a draft standpoint, kind of cover structure of the market. I know I've covered this maybe at least 2 or 3 times already, because a lot of people still have a hard time, I'm sure, probably, kind of following structure. You have minor structure and major structure in a sense, okay? But if we are bullish like we are, okay, with the 120 range chart, again, your higher base chart is that's king. It trumps all. So we'll just take a look at this, okay? I'm just going to draw this out and pay attention. If we are moving to the upside like this right here, all right, and then we break structure to the upside. So let's say this was the first break of an area right here, this first area here. That's our first break of structure to the upside, okay? So this would be our low right here, our major low, and this would be, say for example, and let me draw this out a little further up here. This would be our first major, say, high, okay? After breaking this area structure right here. So we got a BOS, okay? So we got a major high right there and a major low right here, all right? And if the market pulls back, so typically we see things happen like this right here, where it'll push lower or retrace back, right? And then it'll swing up, make it a lower high, okay? And then it will break and make a lower low, right? Okay, let's fix this arrow here. I'm trying to make it as clean as possible, okay? But then we turn back around, all right? And then it moves back to the upside and does something like this right here. Okay, so we get a high to the upside, a low, and then the next break to the upside will be a high, okay? So what we have now is another break of structure to the upside. So marking where this was our prior major high at, this would now be our most recent major low, and this being our new major high. Now, you may be asking, well, what if the market would have came back here and broke through this low right here? Well, then that should give you an indication that the market probably is not done or is changing or shifting, wanting to go to the downside. Or even right here, if it comes back after making this major high and then breaks below here, then that is a shift lower. Okay, letting us know that the market may be trying to more likely shift direction and breaking lower. Now, if this was, let's just say this was the 120 range chart, and we saw where the market actually broke below this first area, like right here, okay, then this would be, again, a structural break to the downside, and then we start to can potentially look for, opportunities for the market to go short, all right? But as long as the market is breaking higher, making higher highs and higher lows, again, this would be our major low, our most recent low here, which would be our major low, and then let's do away with this, would be our major high right here. Then the market shifts and pulls back, of course, going to get a retracement, okay? And then it breaks back to the upside and gives us another high. So then we broke structure again. So then we broke above, we have a break of structure here, and then a break of structure here. As long as we're not breaking through areas of lows and taking out lows, then we're still bullish on the higher base chart, the 120, for example. Okay, we're using that. Then we would still be bullish to the upside, and we would continue looking for opportunities to go long. The thing about it is, on a from a lower base chart like today, for example, on the 60 range chart, what I showed you just shortly. It broke through a minor area structure. And if it breaks through a minor area structure, okay, even though we're bullish to the upside on a higher base chart, we're counter trend trading. But if we break through a minor area structure on a slightly lower base chart, and then we continue doing so to the downside to where we pull back and we have supply areas, then we can look for opportunities to go short. But the thing about it is, be very mindful because you're counter trend trading against the overall grain of the market from a higher base standpoint. But this right here would be structured from a higher base chart, okay? All right. And as long as we're not breaking through, which would be 120 range, as long as we're not breaking through any major area or low, then we're still bullish to the upside, okay? Each time that it breaks and makes a new major high and a new major low, all right? So this would have been the first major low, first major high, for a second major low, or the next, or the most recent major low at the market broke structure above here, new major high here, new major low, new major high. And as long as we're not folding back and taking out any significant areas of major lows, then we're still breaking structure, because on the higher base chart, the 120, we're still bullish. Again, you can look for counter trend trades if you know how to do so. Okay, I'm not going to spend time or videos going over maybe down the road, because what I'm trying to introduce is really, paying attention to structure overall and moving in the same direction. That's what I've been doing since, kind of day one, and talking about things. Even though you may see me take trades against the grain sometimes, counter trend trading, I'm still talking about to all beginner traders and new traders that are, watching the channel, people who are starting off, still trying to get and understand the structure of the market, taking the trades across multiple charts, multiple confluence in the direction of the higher base chart. And so each time we're breaking structure to the upside, you say, okay, well, Mike, where's the demand zones located? Or possibly could be. It could be here. It could be here. It could be here. We never know where they're going to stop at. But if we start to, for any reason, start to break back lower and take out structure, you have to understand that, now the market has actually shifted and turned direction back to the downside. If we break through any major low, so that the market would go from bullish to more of a bearish standpoint. But this is bullish activity to the upside, and then you possibly could get another, run to the upside where it does, again, giving you this kind of picture here, okay, back to the downside, and then it runs back up. Again, as long as it doesn't take out a major low, we're still bullish to the upside, because now we got another break of structure here to the upside. And then you flip it around from a bearish standpoint, it'll be the same, but just moving to the downside. As long as if we're moving lower, making structural breaks to the downside off a higher base chart, as long as we don't, break through any major high back to the upside, then we are still we're still bearish. So let's also discuss this too as well. What if the market was breaking structure to the upside and we were bullish, all right, like we are now, but then it breaks lower? Okay, let's take this line right here and do away with it right quick. Okay. All right, let's say that we actually ran lower, okay, and took out this low right here. All right. So we broke below this low right here. Okay, you see that? This low right here within this structural break to the upside. Now, if we do that, this could be a minor structural break lower. And yes, you can look for opportunity to go short, but again, you're shorting against the grain overall, because this will be your major low. So if this is a minor low and this is a major low, be very careful about shorting. Okay, if you get a pullback here, be very careful about shorting, and be very mindful that there's a major low right here, okay, that still has not been broken, and the market could actually continue pushing back to the upside. So if you're shorting after a break of structure, meaning a minor break of structure and not a major break of structure, then be very mindful, because the market will stop at some point and can turn back around. So your trade could be, short-lived. So for example, like right here, let me show you this. All right, so this is you can see this is on the 120 range. I showed you just a bit earlier. This was our high. This was a low that the market made. So this was our prior major high, for example, right here, okay, and then the market pulls back and makes a low here, and then it breaks breaks to the upside. So we break above this area here at 267. Now this is our most recent pretty much major low and major high here, but there's also a minor area of structure within this structure. Remember, I talk about internal structure. If the market breaks and continues to run to the downside, when we break below this area here at 103 or 104, yes, we could potentially be looking for, opportunities to go short, but be mindful we're still trading against the overall direction of the market because we haven't broken through a major area of structure yet. Okay, so you may see something where the market does may run lower. Okay, say it does this right here, runs to the downside, and it breaks below this area right here. Okay, let's bring this up so it looks like it broke. Okay, so it breaks below that area there, and then you look for a pullback to take a short back going back down, right? But be careful because it hasn't broke to that major low. And so what would happen would be something like the market could do this. So you look for a pullback after breaking that minor low to go short somewhere at an area of supply, comes back down, rejects this area because we have a major low there, and then it just goes back up and it comes back and breaks above here. You see things like that. So major and minor areas of structure are very important to pay close attention to. And so you have to spend time on the charts looking for things like this to unfold. But this could be a structural break below a minor area structure break. And then, like I said, I pull back, maybe to go short, but be mindful because you have a major low resting right below you. So again, these would be our, that was a major low, major high area. And maybe I could draw this a little better, guys, so bear with me. Right here, and make this a little larger, I guess. Okay. And as we continue, we will get a pullback here. So here's another one. All right. And then let me just keep this going here. Another major high. All right. Right there. And let's, how did I have this here? Sorry about that. Okay. Another major low. Another major high. And then another major low. All right, and then we break this high right here to make a new major, another major high to the upside. So this would be bullish sentiment, bullish structure to the upside. And as long as we're doing that and not breaking through any major low, then we're still bullish. We're looking for opportunities to continue going long. Again, we can break through some area or minor area structure at any structural point below. If we like this could be a minor low, okay, a minor structural break here. And if we do that, then just be mindful that we're still bullish because we haven't broken a major low yet. And then if we're looking at this thing from a bearish standpoint, it's just everything in reverse. That's all you have to just be mindful of, all right? So this is just kind of a representation of what you'll see sometimes in the market. Now the market will, the picture won't always be painted like this. It'll do some things to throw you off, but just pay close attention. That's why it's imperative to use a higher base charts and then scaling down or moving down to look for, what's going on in the higher base to start off with. Have we taken out any major area of structure, any minor area of structure, whatever the case is? As long as we have not taken out any major area of structure, again, we are moving to the upside or taking out any major area of structure back to the upside. Okay, so if we're moving higher and we haven't taken out any major low, then we're continue moving to the upside. If we move lower and we haven't taken out any major high and just moving lower, then we should be still moving to the downside. So allow the higher base charts to guide you in the direction when you start looking for opportunities for zones. Okay, so that's why I showed today that because we were bullish to the upside, all right, bullish to the upside, and then we had a minor structural break to the downside on our 60 range. Okay, and you'll see things like that happen, when the market will start moving lower on a slightly lower base chart, but the overall higher base chart, maybe the 120, for example, is moving to the upside. Then you can look for shorts, but be careful because you're moving in your counter trend trade. And that's why I said don't do that. Try not to. In your best, the counter trend trade, the trades work out better and you have a higher probability chance of the market moving in your direction at a key zone. So demand is where it's at right now, is what I'm trying to say. Overall bullish, be looking for opportunities to pull back the key areas of demand until the market actually shows, its hand in a different direction, meaning we start taking out some major area of structure, even from a higher base standpoint. So like, here, if we start running structure back to the downside and we take out, of course, through this minor area right here of structure from a higher base chart, and then we break this major low right here, then we definitely, moving to the downside. But from right now, overall, yeah, looking at the 60 range chart, yeah, we look bearish. Of course we do. You can see that we are, have broke through this minor area of structure right here to the downside. And let's see, Yeah, so we broke through that area to the downside. So yeah, we can look for opportunities to go short, of course, but the overall direction is bullish right now. So I'm gonna go ahead and wrap this up. Hopefully, this gave you a better understanding about structure, things to look for when it comes to major and minor areas of structure, as well as major highs and major lows. You have to look from a higher standpoint or higher chart and then move down to kind of understand. But always start with a higher base chart to see, are we in bullish mode, breaking structure to the upside. And as long as we're doing that, look for opportunities on your lower charts to trade going long. All right. So right now, not a lot going on. I mean, of course, I mentioned some areas where you could have taken shorts from. Looks like the market did break some structure to the upside here on the 60 range chart. And I'm not sure what it's trying to do here now, if it's trying to fold back down, if it's going to continue taking out some areas to the upside. But anyways, that's all I have for you guys today. I just wanted to spend some time. This wasn't a video showing you some trades I took. I wanted to kind of more so spend some time about structure, and hopefully it makes sense to you. But anyways, I appreciate everyone who watches the videos on the daily. Thank you for doing so. Thank you for being a sub to the channel, being a loyal member to the community as well. And if you're not a current subscriber, please take the time to go ahead and click on the sub button down below. Make sure to turn on all your post notifications so you don't miss one of the uploads here on the channel. And last but not least, if you found value in today's content, please do me the biggest favor of all and drop a like on the video. And one other thing, if you're interested in joining our Discord, it is free to join. Just scroll down to the latter portion of the video or down below in the description portion of the video, and you'll see a link that says join the Discord. It is free to join, so you can come over and join us. And the trading floor is where a lot of us traders will share like our trades, our entries, or screenshots of our trades that we do take. And but again, we trade futures here, so if you trade futures, more than welcome to come on and invite you in. But outside of that, I appreciate everyone tuning in. Take care. Have a wonderful, wonderful weekend. Goodbye.